Hey, Bulls and Bears, something that is possibly a predictor or something that is indicating that we're at a turning point in the economy is the fact that mortgage jobs and loan officer jobs are starting to decrease. In fact, we're seeing layoffs now start to tick up, and the overall number of people employed in this sector is beginning to drop. So let's take a look at some information on this. Now, real quick before we get started, please make sure that you are subscribed to this channel. Some people have been reporting that they've been unsubscribed or mostly just not seeing the videos in their feed. So please make sure you hit that notification bell as well. Yeah, so this could be a sign. This is similar to what we saw before the financial crisis, which was about 14 years ago now. We started to see the mortgage industry slow down with interest rates rising, mortgage rates rising. And what happens when mortgage rates rise? Well, the demand for refinancing drops off and volume starts to go down. Now, there's still a very big demand for housing just because of all the other things that are happening in the economy. But it is an interesting turn of events that we're seeing here. Now, we saw this after the housing bubble went bust. We saw about 50% of real estate agents' jobs were lost or they just quit. They let their licenses expire. Now, since then, we've seen it climb back up to new all-time highs as far as the number of real estate agents. But let's take a look at some information here. And this one comes out of Bloomberg. We look to the far right here. It says too many workers, mortgage lender employment has grown steadily since 2019. Now, the surge since 2019 is pretty astonishing, up over 50% just since 2019. So in under 3 years, up 50%. So now we're starting to see the number of people employed for mortgage and loan brokers actually drop here. If you look at this chart, you look to the far right here. Now, the number of people employed in the mortgage industry is around 130,000, and that's up 50% since 2019. According to the Bureau of Labor Statistics, the BLS, that's the highest since 2006, just a short time before the housing bubble went bust. I'm not saying the housing bubble is going to bust. They could pull a bunch of new tricks out of the hat. We could have more forbearances against the mortgages. You know, no one can tell exactly what's going to happen, but it is interesting what we're seeing now with this decline in mortgage jobs. And we have spoken about some of these layoffs, but here's some examples from this article. Mortgage lender Home Point Capital laid off 10% of its workforce. Better.com, an online mortgage broker, we talked about that one here on this channel, fired about 900 workers back in December via a conference call. Remember, the guy called his workers into a conference call and laid them off on that call. And people were upset. People were crying on the Zoom call. It was pretty interesting the way that that was handled. Now, back to this chart here, if you look 2017, 2018, you'll also see a dip at that time as mortgage rates began to rise. But what happened, the Fed came in and they reversed course and lowered rates again. So therefore, employment in the mortgage sector skyrocketed. And this goes right along with one of the points that we try to stress here from time to time is that a lot of the jobs that you see right now that exist are only in existence because of easy money and low interest rates. Borrowing and spending creates jobs. That's the way it works. So when something happens to make it more difficult for people to spend money or borrow, in this case, rising mortgage rates, well, jobs are going to go away. And we've had near all-time low interest rates now, including the Fed funds rate, for over a decade. So these are the good times that we've been seeing here over the past 10 to 12 years. Just wait until the jobs are no longer needed because of the high mortgage rates. And again, I'm not saying it's going to happen. This is completely controlled and manipulated. They could, again, turn around and drop rates at the blink of an eye, at the snap of a finger. But the risk out there and the hard times that we're going to see if we see employment really start to increase, that's going to be catastrophic now, combined with the fact that you have just such high cost of living and the shortages and all the things that are happening right now. Speaking of being unemployed and joblessness, recent report here out of CNBC, 64% of unemployed men in their 30s have criminal records, a barrier to landing a job. So here's the question. Are these people criminals because they can't find a job, so they have to turn to a life of crime? Or is it because they can't get a job because of their criminal record? So it's the chicken or the egg question. Obviously, deteriorating economic conditions does play a important part in crime. When you see the economy declining, when you see the rising cost of living, when you see wages not keeping up with the rising costs, you typically usually always see rising crime. So yes, there are some people out there that turn to crime out of necessity, but other people are, many would argue, are just born criminals. Now, the rising cost of living is affecting people globally. Recent report here out of the UK, this is Reuters. And over there, inflation at a 30-year high. Here in the US, we're close to a 40-year high. Households are starting to buckle. So this article talks about a mother at night turning off her heat and getting under the blankets and adding a bunch of layers of blankets on to stay warm instead of keeping the heat on overnight. It also talks about her decision to no longer pay for cable television and to cut back on the movies and cut back on entertainment, things that we talk about here. As things continue to worsen as far as the cost of living and affordability, people are going to have to make the tough decision. What items do you need versus what items do you want? Or even worse, even more so, what items do you need to survive versus what you can live without? People with long commutes, people that have to use their vehicles a lot for work. Think about all these delivery drivers, the Uber drivers, the Lyft drivers, all the food delivery services. They're going to get stinged pretty hard here, and these gas prices are just going to keep going up. We might see a pullback maybe if the war situation over in Europe de-escalates. But take a look at what happened today with oil. Currently just under $93, but you see earlier today jumped up almost to $96 a barrel. And it actually hit $96 a barrel earlier today before dropping back down to just under $93. All right, so again, it looks like the good times are gone. Prices are only going higher. America's energy independence has definitely declined bigly here in the past couple years, especially. And get ready for prices to continue to rise. People continue to brace. Please let me know down in the comments what you think about the mortgage layoffs. Is it a sign, or are they just going to turn around and drop rates down again when they see this mess begin to unfold and all the layoffs? Again, hope everybody's doing well. Thanks for watching. Big love, people. Bye for now. Peace.